All right. Good morning, guys. Welcome to a new pre-market analysis. It's 6:50. Yeah, 5:50 London time, 6:50 here. It's Friday, 26th of April, and we're here. We're back. No trade so far this week, which is a pity, but it's all right. It's all right. It's all right. Um, yeah, let's dive into it. Before we go to the high time frames, let's first go to the low time frames and check in with what happened yesterday. So first of all, we can see that we didn't take previous daily lows and create equals. So that's nice. That's interesting. Um, although I hope that with that we didn't reach back. Oh, that's perfect. So we got above this high. Price started to correctionally move upwards, got above this one, and I knew that there should have been a reaction from that area, and we did indeed get a reaction from that area up here. Look at this high, low, lower high, lower low, bullish break, taking out the liquidity. And that's what caused the bearish break. So you have your buy to sell move essentially. And this functioned as liquidity that's been taken out by news. And from that order block actually to the left, let me show you. Oops. From this order block here, we got the move. So I could just mark it on real quick. We don't have There's no rush. We have time. I don't know how long you guys want my videos to be. They're quite long, I know, but literally just tapped in and then we got that move. So we can get this away. Um, for now, I'm keeping it like this, but of course we can come up higher. We know that we want to reach into the premium areas of our high time frame ranges. So yeah. Um, Yesterday Asia highs were taken out, previous daily highs were taken out. Price came up. We got that little, I don't need that actually. Got a little slowdown here, building up liquidity, uh, trying to induce sellers here. If we go even lower, we can see that we have a high. And people that don't know about structure, they have a low, a high, a higher low. Then they would say maybe something like a high, a low, a lower high, lower low, a bullish break, return to discount, another bullish break. So they're in longs, and then as soon as they break, they see this break here. They see okay shorts. We know that this was the last low that created a new high. If anything, there's just too much liquidity to the downside here. Anyway, look at this. That's just almost a super clean trend line. So yeah, so got that news came out or came in. Boom, they were taken out. Sellers. If you go to the 1 hour, kind of a support and resistance area again. We're in really nice one. Tapped into that, push to the downside, going lower again. And we can see that just before taking up previous daily lows, we turn around, not taking all the liquidity, and now we build up some liquidity to the upside here in the form of that slowdown with the wicks and a clean trend line again, or almost a clean trend line there, but especially this one, previous daily highs, and with that one, so almost equal previous daily highs and equal previous daily low. So what I would like to see, and in a perfect scenario, that will be actually super great. Hold up. Let me check this real quick. Let's go to the 15. Yeah, okay, so mark out this one as well. Because it sits just below that liquidity. You can see it took out that bearish candle there. So that will be my sweep, so to say. Liquidity sweep. If you go to the 5 minutes more, but physically you can see it better. You see, load, create a high, taken out, move. So kind of a 15-minute, 5-minute, 50-minute demand zone. It's a 50-minute demand zone, but the sweep is on the 5-minute, 50-minute demand zone. That sits just below those equals. So in a perfect scenario, we now want price to reach back into our discount. We have a low that led to a new high. We've got liquidity to the upside. We've got internal range liquidity. So it will be perfect if we see price trickle down. Then we got that move. That's ugly. Price trickles down. Gives us a bullish break. And then the move to the upside. That would be perfect. Taking out internal range liquidity. And yeah. Of course we can go lower. We know that there's a lot of liquidity here. There's liquidity here. I'm gonna do it like that. It's looking cleaner. The arrow, yeah. But there's also reason enough for price to first get up here, get into those premium areas now, because there is enough liquidity to the downside. So hold on, let me. There is enough liquidity engineered here and here for price to first take out this little group here. We take that out. We get to the upside. We get into our premium areas. Price start to slow down, give us some turnaround, and then get a move down, taking out this liquidity. That could be scenario. So scenario one is that we get this move. Scenario two is that we get this move. And yeah, that's it. So for today, what I will be looking at is, of course, the same entry drill as usual, or the same confluence as usual. We've got Asia highs and previous daily highs above. So we wait for them to be taken out and we can look for shorts. Asia low. Although it would be higher probability to wait for the premium, it still fits our entry drill. And there still this area which we just slightly tapped in, but in this case, I feel like we can use it again. So that would be my play. So to mark it out, this is too far away anyway, but I would be looking for longs from some of these areas, and I would be looking for shorts anywhere up here, really. We know that on the higher time frame, after we reach back into that, we might get a higher time frame inducement where we get a bearish break, and that will be the first time we reach back into these highs. So we might get up higher first and then get a move. That will be our play. And from here, of course, we just look for a little short or minor shorts into those discount areas. Nothing to swing yet because we didn't reach back into premium pricing. So shorts from anywhere up above the previous daily highs and Asia highs, of course, and longs from discount. That's it for EU. Looking at GU, this is a bit luck, but it's nice. I marked that area out as the area above the previous weekly highs from where we can look for shorts. And we actually tapped into that, not knowing that. Sorry. Sorry. Hay fever or pollen allergy. But not knowing that it would actually stay within this area. But as I said, this area above the previous weekly highs gave us a reaction. We got up there. And we've got sort of same price action as an EU. Previous daily highs are still intact. The previous daily lows can move now. I think they're here or here. But yeah, if this is the previous daily low, we have equals with the low. That's what I thought. He opened at 10. There you go. One closes, one opens at 10. So it's kind of equals, but this is not a strong low, so I don't count it as equals. But GU, pretty much same thing as on EU. We now have nice internal range liquidity, or sorry, we first have this low that was created down there, down there, down there. We first have the low that is created down here. Bullish break, liquidity been taken out as projected at the start of this week, or maybe even last week. You have the bullish break, liquidity taken, new range from this low up to potentially this high or another high. And then we have internal range liquidity, internal to the range. So it needs to go inside the range to then target external outside the range. That's why it's called internal range liquidity. Long areas stay the same. Still want to long from these areas. So nothing changes there. Except that we have now areas from here where we can look for longs. We could even look for longs from here, but there's no discount. So, because it takes out the low that led to that high sweep. So, in case this was discount, this would be your sweep there. Very minor, but sweep is a sweep. Liquidity sweep, I don't know what to call it. Liquidity grab, whatever. That would be your long area. But as you can see, it's not in discount area. So, but yeah. And pretty much same scenarios for GUS on EUS, or we get this one. Well, it is possible to take out this, but looking at the price action, what we have now, it's not likely. So we get this move, or we get this move. Or of course we can come up higher and take out, do it like that. But yeah. So yeah, EU, GU, and then DXY doing us dirty there. First came down lower. Actually created a new range, low. No, not really. High that led to a low. Was initially anticipating on these highs. But then we got this high, came further down. Internal range liquidity taken on DXY. So on DXY, I think that we might go for the lows now. Why? We got internal, we took the liquidity, we didn't create a lower low yet. EU and GU didn't reach back yet. I'm gonna remove this, by the way. It's ugly. If you look at it, break, no discount, no discount, no discount, no discount. So unlike EU and GU, DXY did reach back into the premium areas. So DXY, look at DXY, we might now get a move to the downside, which initiates the long move first on EU and GU. So yeah, let's see. Ideally, we get the move to the downside as well, but that would mean that there won't be a trade for me today. Same for GU, there won't be a trade for me today. But looking at the XY, I think that we might reach higher first. Same as in EU, and then get the move. So yeah, that's it. Pre-market analysis done. Wish you guys good luck in the market. Oh, hold up. I'm not gonna forget this again. I don't even know what that means. Where's my translate tentative? Ooh. Dutch. Ah, okay. Yes, sir. No, professional. Okay. But we have some news here. We've got some news here, so we can expect some move towards the end of the day. And yeah, that's pretty much it. All right, wish you guys good luck in the market today. Last day, don't blow it. If you got profits, might be better to stay away. However, if it's in your plan to trade and you see your entry drill, well, you've got to trade. Okay. Catch you guys later. Wish you guys good luck. Peace out.